One wrong keystroke, a $10,000 invoice typed as $100,000, and every report after it is wrong. The financial statements, the decisions, all built on that one bad number. That's the problem application controls solve. The quality checks built inside a single app that makes sure the data going in, moving through, and coming out is right. In this video, we'll follow that one invoice, a $10,000 sale, through input, processing, and output controls, the heart of the ISC exam. Welcome back. Last video we covered IT general controls, the controls over the whole environment. Now we zoom into the second family, application controls, the controls inside one specific app. I'm Professor Lamptey. Here's the plan. What application controls are: the 3 stages every transaction passes through: input, processing, and output. The 4 objectives they protect, and how they show up on the exam. Let's define it. Write this down. Application controls are the controls built into a single application to make sure each transaction is processed completely, accurately, and only when it's valid and authorized. General controls guard the whole environment. Application controls guard what happens inside one app. So let's follow a single transaction the whole way. Our $10,000 customer invoice, entered into the sales system. It moves through 3 stages: input, processing, and output, and we check it at every one. Stage 1, input controls, the big one, because garbage in, garbage out. Watch our $10,000 invoice hit the edit checks as it's entered. A field check, the amount field must be numeric, it rejects letters. A validity check, the customer ID must be a real existing customer. A limit or range check, an amount far above normal, that $100,000 typo from a moment ago, gets flagged instantly. A completeness check, the customer ID can't be left blank. And a check digit catches a mistyped customer or account number. Every one of these stops bad data at the door before our invoice ever gets in. Our invoice doesn't go in alone. It's part of a batch, say 50 invoices. Control totals prove the batch is intact. A record count, did all 50 go in? A financial total, do the dollar amounts, our 10,000 included, add up to what we expected? And a hash total, a sum of something meaningless on its own, like all the customer IDs, purely to prove nothing was added, dropped, or changed. If the totals don't match, something went wrong, and you catch it before it spreads. Stage 2, processing controls, handling our invoice correctly now that it's inside. The system posts it to the correct accounts: debit accounts receivable, credit sales revenue, and logic checks confirm the math and the rules. Run-to-run totals carry a control total from step to step, confirming nothing was lost along the way. And matching checks that related records agree, our invoice against the sales order and the shipping document behind it. It's the same principle anywhere records must line up. Good data can still be ruined by bad processing. These controls make sure our invoice lands exactly where it should. Stage 3, output controls. Our invoice is now on the sales report. Make sure that report is complete, accurate, and goes only to the right people. Reconcile the output back to the input. Do the totals still agree, end to end? Review the report for reasonableness, and control distribution, so it reaches only authorized users, not the whole office. The job isn't done when the data is processed. It's done when the right, correct output, our invoice included, reaches the right hands. Step back, and every control we apply to that invoice served the same 4 objectives. Memorize these for the exam. Completeness. The invoice was captured, none dropped. Accuracy. 10,000, not 100,000. Validity. A real customer, a real sale. And authorization. Properly approved. Complete, accurate, valid, authorized. Whatever control you're looking at, ask which of these 4 it protects. That's exactly how the exam wants you to think. One more distinction the exam loves. Application controls can be automated, programmed right into the software, like the edit check that rejected our bad amount, or manual, like a person reviewing the report. And here's where it connects to the last video. An automated application control is only as trustworthy as the general controls around it. If change management is weak and someone can rewrite the program, That automated control can be quietly switched off. That's why auditors test the ITGCs first. The two families work together. So what do application controls actually stop? Honest errors, the fat-fingered amount, the missing field, the duplicated batch, and fraud, a sale to a fake customer whose ID fails the validity check, an inflated invoice caught by a limit check, just like our $100,000 typo, an unauthorized sale with no approval behind it. Every control we followed on that invoice is a tripwire. The stronger the application controls, the harder it is for a bad number, whether a mistake or a theft, to reach the financial statements. That's the whole point. 60-second recap. We followed one invoice from entry to report. Application controls live inside an app and protect four objectives: completeness, accuracy, validity, and authorization, across three stages: input, processing, and output. Input controls stop garbage at the door with edit checks and control totals. Processing controls keep the data correct. Output controls deliver the right result to the right people. And automated app controls only hold up if the general controls behind them are strong. If that made application controls click, subscribe. Next, we step up to the framework that ties security together, the NIST Cybersecurity Framework. I'll see you there.